Hey traders, you're about to discover a mind-blowing indicator. I've been testing this winning combo and the results are insane. To begin, open a preferred web browser and navigate to the tradingview.com. This is a popular platform where traders worldwide access charts, analyze markets, and engage with other trading enthusiasts. Once you're on TradingView, you'll need to select a chart for the asset you wish to trade. Feel free to choose any asset such as forex pair like Euro USD or gold, a stock like Apple or Tesla, or even cryptocurrency like Bitcoin. For demonstration purposes, I'll be using gold chart, but remember that this strategy can be applied to any chart of your choice. Next, choose a time frame that suits your trading style. Time frames can range from 1 minute to 1 month, but since we're focusing on a scalping strategy, a lower time frame like 5 minute or 15 minute might be more appropriate. For this example, I've selected the 5 minute time frame, but you can adjust this based on your trading preferences and trading experience. Now that you've got your chart and time frame set up, it's time to add the Smart QQE mod indicator to your TradingView chart. Follow along as we dive deeper into this indicator and discover how to harness its power to optimize your scalping strategy. Let's start by understanding the first part of the Smart QQE mod indicator, the 200 period simple moving average or SMA 200. This tool helps you identify the overall trend in the market, which is crucial for making informed trading decisions. And here's how it works. When the price candles are below the 200 SMA line on the chart, we consider the market to be in a downtrend. In this situation, it's wise to focus on taking sell signals, as trading in the same direction as the market trend increases your chances of success. On the other hand, when the price candles are above the 200 SMA line, the market is considered to be in an uptrend. In this case, you should prioritize buy signals as they align with the market's current direction. By following the 200 SMA, you can better understand the market's overall trend and make more strategic trading decisions. Keep in mind that while it's not a defined rule, trading with the trend generally improves your odds of making profitable trades. Moving on to the second part of the Smart QQE mod indicator. Let's explore the moving average ribbon. The MA ribbon is a crucial component that helps generate trading signals. Here's how it works. When the price candles moves above the MA ribbon from below, it indicates a potential buy signal that suggests that the price might continue to rise, making it an opportunity to enter a long position. Conversely, when the price candles move below the MA ribbon from above, it generates a potential sell signal. This scenario implies that the price could continue to decline, offering an opportunity to enter a short position. The MA ribbon helps you identify these trading signals by providing a visual representation of the price interaction with the moving averages. By observing how the price moves relative to the ribbon, you can better understand the market's momentum. And the final part of the Smart QQE mod indicator we'll discuss as the bands. These bands are an essential component that can help you make better trading decisions. Let's break down how they work. The indicator features two bands, one above the price candles and one below them. These bands are calculated based on the relative strength index or RSI, a popular technical indicator that measures the speed and change of price movements. When the price candles enter the upper or lower bands, it's a sign that the market might be reaching an overbought or oversold condition respectively. In such cases, it's advised to avoid entering new trades as the market could potentially reverse or consolidate soon. The bands are valuable tools that provide visual cue for identifying areas where the market might be overextended. By paying attention to these zones, you can avoid entering trades at potentially unfavorable times and manage your risk more effectively. And here's how to trade using the Smart QQ Mod indicator for long and short positions. For a long trade, first, you'll want to spot a buy signal on the chart. This happens when the price moves above the moving average ribbon from below. Next, make sure the market is in an uptrend by checking if the price candles are above the 200 period simple moving average line. But before jumping into the trade, ensure that the price isn't inside the upper or lower bands of the indicator, since that could mean the market is overbought or oversold. Once you've confirmed all these conditions, you can go ahead and open a buy trade. Now, to manage your risk, set a stop loss. Depending how the market's behaving, you can pick a recent swing low, the lower band, or the SMA line as your stop loss level. And to aim for a profitable trade, set a target that's 1.5 times the risk of your trading. And for a short trade, you'll follow a similar process but look for a sell signal on the chart, which is when the price moves below the MA ribbon from above. Then check that the market is in a downtrend with price candles below the 200 SMA line. Again, make sure the price isn't inside the band. So if all conditions are fulfilled, you can open a sell trade. After that, choose a stop loss level using a recent swing high, the upper band, or the SMA line based on the market conditions. Then set your trade target, aiming for a risk to reward ratio of 1 to 1.5 or another suitable target that fits your trading strategy. But before we wrap up, if you're looking to maximize your profits potential and potentially double your earnings on each trade, I highly recommend checking out the video recommendation on your screen. Happy trading!